All right, today we are putting an industrial giant 3M under the microscope for a full financial autopsy. Now, this company has been through a whirlwind with massive litigation, huge settlements, and a complete corporate overhaul. It looks nothing like it did just a year ago. But the real question is, has all that surgery actually healed the patient? Let's get in there and find out.
So here's the big question on everyone's mind. Is this a genuine turnaround story, or did 3M just manage to stop the bleeding? To get to the bottom of it, we're going to debate the evidence. We've got the bull case, arguing this is a revitalized company ready to run, and the bear case, which says there's still some serious cracks in the foundation.
All right, let's kick things off with the bull case. And the argument here is actually pretty straightforward. The new 3M is finally here. We're talking about a massive, positive, structural change that has cleared away the biggest storm clouds that have been hanging over this company for years. And look, the key thing to get here is that we're not talking about promises anymore. These are done deals. The huge healthcare business Solventum spun off on April 1st. That massive public water system settlement, it became effective in May. And the combat arms earplugs litigation, the other huge legal mess, has over 99% participation, with the company already cutting checks. For the bull, this means the era of crippling uncertainty is officially over.
And you can see the payoff right away on the balance sheet. I mean, this is just undeniable. In just 6 months, 3M absolutely slashed its net debt from over $10 billion all the way down to $2.7 billion. The bull will tell you this isn't some minor accounting trick, it's a fundamental repair of the company's financial health. This gives them incredible flexibility and makes them way more resilient.
So what happens when you clean house like that? Well, you get more profitable. The adjusted operating margin so far this year has jumped to an impressive 24.2%. The crucial point here is that this shows the new, leaner 3M isn't just smaller, it's a much more efficient, profitable machine. And here's another thing. After being stuck in the mud for a while, the top line is finally moving in the right direction again. Now, look, is 1.1% organic growth going to blow your socks off? No. But that's not the point. The point is, it's positive. For the bulls, this is a huge turning point. It proves the core business is stable and can actually grow on its own again. And if you want the cherry on top for this bull case, just look at what management is doing with its own money. The company has hit the accelerator on its capital return program, buying back $2.7 billion of its own stock. This is management putting their money where their mouth is. It's a huge vote of confidence that they believe this turnaround is the real deal. Okay, so that's a pretty compelling story, right? Well, hold on a second. Our bear analyst is looking at the exact same set of numbers and seeing a totally different picture. The argument here is that all these great headline numbers are actually hiding some very real and very stubborn weaknesses deep inside the business. The entire bear argument really starts with this one simple question. Yeah, a 24.2% margin looks fantastic on a slide, but you've got to ask, where did that profit actually come from? Is it from the business getting fundamentally better and more efficient, or is there something else going on just below the surface? So let's peel back the onion on that 1.1% growth number, shall we? Turns out it's not a story of widespread strength at all. The transportation and electronics business is doing all the heavy lifting, and that's mostly because of a short-term bump in consumer electronics. Meanwhile, their biggest segment, safety and industrial, is totally flat. And worst of all, the consumer business, the stuff you and I actually buy, like Post-it notes and command strips, is barely growing at all. The bear says this is not a healthy growth profile. And right here, this is the bear's smoking gun. These are management's own words, straight from their reports. You see these phrases over and over, cost dyssynergies and cost inefficiencies, directly tied to the Solventum spinoff. This is the company basically telling you that while simplifying the business looked good on paper, it actually created new, ongoing cost problems. It wasn't a clean break. There's a real price to pay for this new structure. So when you put it all together, the bear case is this. Sure, 3M fixed its balance sheet and dealt with its lawsuits, but in doing so, it exposed a core business that's really struggling to grow and is now fighting new cost headwinds. It's become a safer, more defensive company, for sure, but the engine that's supposed to drive future growth, it's sputtering. All right, so we've got the bull, who sees a company that's cleaned up its act and is built like a fortress. And we have the bear, who sees a pretty facade hiding a weak engine. So where does that leave us? What's the one thing we can actually agree on based on the evidence? After looking at all the evidence, the narrative really has to shift. This isn't a turnaround story anymore. It's a stabilization story. The bull is absolutely right that the company is on much stronger financial footing and the biggest risks are gone. But the bear is also right that this newfound stability hasn't fired up the growth engine across the whole company. The patient is no longer in the emergency room, but they're definitely not ready to run a marathon just yet. They are stable.
So, where do we go from here? Well, it all boils down to two things you absolutely have to watch. First, that consumer business. Can it finally break out of this slump and start growing above that 3% mark? That's what the market needs to see. And second, those cost dyssynergies. Are they just temporary bumps in the road from the spinoff, or are they a permanent tax on profits? The answers to those two questions will tell us everything about whether 3M stays a stable defensive giant or if it can finally start a new chapter of real growth.